Hello and welcome back to Decentralounge, brought to you by GlobalStake, your truly decentralized SOC 2 Type 2 certified institutional bare metal blockchain infrastructure provider. I'm your host, Ryan Hazinski, head of protocol partnerships, along with my co-host Wyatt Clancy, our VP of growth. Today, we're excited to welcome Duke Kim. Duke brings a deep background in capital markets, digital assets, and blockchain native infrastructure, having driven business development and fund administration efforts across emerging Web3 financial ecosystem. Prior to his role at Securitize, he has worked at the intersection of finance and technology, helping institutions navigate the evolving landscape of digital securities and alternative investment models. At Securitize, Duke focuses on enabling traditional and digital asset managers to tokenize real-world assets and investment funds, supporting compliant issuance, transfer agent services, fund administration, and secondary market workflows, all underpinned by a fully regulated blockchain native platform. Securitize's infrastructure has powered billions in tokenized assets and continues to bridge regulated capital markets with programmable finance. Today, we'll talk about Duke's journey into the crypto and finance space, why tokenization matters for the future of capital markets, and how Securitize is helping institutions embrace on-chain financial innovation. Duke, welcome to Decentralounge. Super excited to have you here on this conversation today. Why don't we just start off with, we start with everybody. How did you get involved in this crazy crypto world?
Well, first of all, thank you so much for having me, Ryan and Wyatt. Looking forward to this conversation. Been replaying all the pieces that I want to make sure I hit the highlight reel over the weekend. So, super pumped to dive into this. So, where I started before the world of crypto, which was about 2018 professionally, from an OPSEC perspective, I'll never disclose when I started getting into Bitcoin, but early enough. Well, maybe never early enough. About 2018, I made the jump from traditional finance into my first crypto startup. And before crypto as a whole, started my career on Wall Street. So, as a corporate bond trader, derivatives trader through the global financial crisis, and the aughts, I guess, is what they call it nowadays. Shifted a little bit, taking that front office experience in capital markets as a capital markets participant, got into regulatory operations type consulting, and then ultimately transitioned over to Bloomberg, which is where a lot of TradFi guys go to die. And at that time, I was a little bit too young to say that I'm going to be here for 20, 25 years. But I do love the company, love the platform, love the people. About that time, an opportunity came through, actually through my wife. So nepotism still alive and well in crypto as well. She was actually good friends with a venture partner that had backed a very early digital asset aggregation platform originally called Libra, rebranded to Luca. And so I joined them in 2018, leaving Bloomberg's 16,000 people, having my own assistant and credit card people and HR and all of the functions that I need. I remember my exit interview, two HR people saying, "You're leaving for this crypto thing. Best of luck to you. How many people are there?" And I said, "There, I think I'm employed 20, maybe somewhere around there." And she goes, "Well, you're leaving 1,600, 16,000, whatever the number was at Bloomberg, with all the fun things you have, the snacks, the travel, the good lifestyle. You're prepared to walk away from that." And I told her 100%, I need to make this jump. I believe from the outside that there is something really, really big here. And that was just broadly crypto and digital assets. I walked out of the exit interview and I almost vomited. And I was sober. This wasn't even the celebratory lunch after resigning. This was just walking out after the exit interview. What have I done? I've got a child. I've got a wife. I'm in my, I think, early 30s, mid 30s. What am I going to? Am I really going to be employed 20 something at this crypto startup? Fast forward then the last 8 years, a number of other pretty large startups, a couple of great exits and opportunities and outcomes, and some not great outcomes and opportunities as well, but still living to fight another day. And about a year ago, I got to join Securitize and continue on truly my professional and kind of personal mission, molding together in terms of driving digital asset adoption and innovation at the institutional level, such that it can actually trickle down and ultimately impact the retail the retail crypto adoption as well.
Well, let's get into Securitize a little bit. Obviously, it's a well-known name in the crypto space. You're specifically focused on fund admin sales, but let's get kind of a broadening overview of what Securitize is before delving into that. Interestingly enough, we actually had probably a friend of yours in our first episode, Chase Cervini from MG Stover, which Securitize famously got the book of fund book of business from the admin fund. So curious to hear about all that, how that happened, and what Securitize is really working on broadly, and then your role in particular.
Sure. So I think usually in my client conversations, I kind of start bottoms up, but happy to start tops down because it makes a lot more sense here. So broadly, Securitize, Ryan, as you had posited, right, we've really built what I consider a fully vertically integrated, and I always love this phrase, it doesn't fit on a bumper sticker, a capital markets infrastructure stack for managers that are looking to move their, to go on chain, right? So it's really all the bits and bobs so that professional institutional asset managers can compliantly, securely, competently, do something on chain, right? And for us, that do something has been tokenization, right? Taking an asset that exists in the real world, so an RWA, turning that into an on-chain asset. Our specific niche has been historically large private fund structures. So we're best known for working with players like BlackRock and Apollo and KKR, taking some sort of fund structure and then turning those fund shares into an on-chain token, right? So the thing of value is not a derivative. It's not wrapping some other thing. You're not investing into an SPV. An investor, just like you would if you would, called up your broker and said, I want to invest in this Fidelity product or an Apollo product. It's the same concept mechanically, right? Except that the fund shares aren't being held by some sort of, custodian or some sort of entity or in a broker's name. It's actually held in your own, crypto wallet or a custodial account on the digital asset side of things.
Very nice. Well, why don't we talk more about your specific role, because you deal with those fund admins and trying to actually onboard them and kind of help them understand sort of the value of tokenization and just the crypto space in general. So maybe we can dig into that a little bit.
Sure. So again, Securitize as this real vertical stack of kind of components, right? One of the first core components. Well, actually, let's step back. Let's say the core, the nucleus of Securitize is what we call our digital transfer agent. So in the traditional world of securities management, a transfer agent is effectively like an oracle. It says who owns what, when, and where. Wyatt owned 100 shares of Tesla as of this date, pre or post a dividend. He's due that dividend. He's not due that dividend. He has voting rights, etc. That's what the transfer agent in the kind of traditional world does. So we purchased a transfer agent a number of years ago called Pacific Stock Transfer. It's our analog TA. Then we got the SEC approvals and registration such that we have a digital transfer agent built on the back of that original kind of traditional analog transfer agent function. So that's the thing that actually mints and redeems tokens or the actual securities that we're working with when we work with a manager. The other pieces of it are the ATS, the broker dealer, so we can do issuance, and then we also have fund administration that really drives then the NAV calculation. What's the actual fund share to be valued at, such that they can be, new shares can be issued. Ryan and Wyatt can exchange, shares if they're both accredited, and all of those types of things. So really, we build, again, all the pieces that a manager needs to bring a fund structure or public equity on chain, and then making sure that it's fully compliant. One piece before I dive into the fund admin is really double clicking into the concept of compliance, right? So if the three of us are probably smart enough, and I'll take myself out of the conversation, y'all two are smart enough to tokenize a thing on this pod. Like you whip out your phone, you Google it, you can figure this out. That's the relatively simple, trivial component of it. When we build a token contract for a security to make a digital asset security, we bake into that contract all the compliance that exists in the traditional world. The token can't go to investors in this country. The token has to be locked up and not movable for 12 months or 18 months or some sort of lockup. The redemption flows, things of that nature. Who can it go to? Who can't it go to? All that's baked in, and the rest of our infrastructure then is dependent upon the smart contract code. So the way I think of it is, we make the ball, but then we also create the field, and that field only allows our ball to actually play on that, because all the rules and things of that are built into the actual ball, right? And then we have all the other pieces to kind of navigate the world. On the fund administration side, specifically, really a couple of different types of workflows. So fund admin broadly, right, where you're independent, books and records, third-party administrator, lots of terms for it. But effectively, Ryan, if you are a fund manager and Wyatt trusts you with $100, $100,000, or $100 million, right? You have a fiduciary or a financial responsibility to do good things with that money and try to make more money and make responsible decisions. What no one really wants, though, and this is a crypto ethos, right, is to trust you, right? To say, hey, Ryan took my $100 and said he made $110 with it, and I don't know, the check is in the mail, right? He said he just lost $50 of it, and I don't really know. I'm not really sure what's happening. The fund administrator steps in, right, to be the independent person that captures trade data, reconciles all that, and then does some kind of really nerdy fund accounting work at the individual investor level to say, hey, you gave me $100. Ryan makes $10, it's 110. There's some fees and some other stuff, and you get $109 back, or whatever the math works out to be. The fund administrator does that work. In the world of Securitize broadly, then ideally we work with the managers that we bring on chain, and because we're really seamless and integrated on the back end, internal to Securitize, the experience for the manager is better. And without getting super deep into the weeds, sometimes the functionality of the token itself is a little bit smoother in terms of more, getting closer to the pin in terms of real-time subscriptions and redemptions, or ins and outs into the fund, right? Those types of things can get slowed down at best, and at worst become kind of unfunctional or less functional on chain, because we're not the administrator, and there's a more analog team, a slower team, maybe a team that's not as up to speed on working or dealing with digital assets.
Do you find that there are people who, like the fund admins that come to you, the ones that are they already crypto native, or are they people from TradFi, and then you have a certain level of skepticism that you have to overcome and talk to them about sort of the benefits of becoming tokenized?
So let me clarify one piece on it then. So investment manager, Ryan, the hedge fund guy, Ryan, the venture guy, comes to me, and I'm your fund administrator, right? And we can kind of work just on the fund admin side. You don't want to deal with tokenization. Conversations can start and stop just with me. You're the manager that wants to have us do, the books and records, but also wants to talk about tokenization. Potentially starts and stops with me, but probably also brings in the rest of the Securitize team to talk about, here's what you need on the transfer agent kind of workflows. Here's what we need on the broker dealer. Those pieces, just require a lot more people, and it's a really, a project kind of thing. To your point, though, then I do have, either friendly administrators, just people in the ecosystem. They have a fund. That fund does want to tokenize. The administrator, just like I would try to do, is acting as sort of a lowercase trusted advisor and saying, hey, we don't tokenize. We might be able to still be the administrator if you do tokenize, but we have this guy that can be willing to have a conversation. So sometimes I talk to another administrator just to explain kind of how this all works, give them assurance that I don't, to be blunt, necessarily have to take their business. It's really about kind of what is the best for the manager. So again, if it's a very, we'll call it less attractive Web3 product, not a great yield, it's going to be a quarterly redemption, ins and outs. An administrator that's not as technically competent from a digital asset perspective as Securitized Fund Services, that might be sufficient. And I'm fully happy to have that conversation and say, hey, your current admin can probably do this, and that's fine. If you want something different, if you need some more functionality in the token, we can tease that out. And if there is a discussion to be had about us taking over the administration, being a partner, there are other workflows as well. But to your broader question, when I think about fund administration for digital asset focused funds, so that's as simple as Wyatt and I smashing buttons on Coinbase and Kraken and just buying Bitcoin, to going 8 ways from Sunday and running, brand new GlobalStake infrastructure on a blockchain that got released last week. That's a whole different set of problems from an operational complexity perspective. I think as a manager, if you're going into the market saying, hey, trust me with your money because I can identify alpha opportunity, and on the flip side of that, defensively, I can also be really great at risk management, operational control, that's why you should trust me, right? I've got track record of making money. I've got track record of not losing it or not taking unnecessary risk. As those aspirations get bigger, you want to run more money. You want to, you're correspondingly carry more risk operationally. The more the more I will bang the table on saying you need to work with an administrator that really understands digital assets and doesn't just nod their head and say, yeah, yeah, we can do it, because it's not all just clicking buy and sell on Kraken. Like there's a significant amount of work and expertise that is required when you deal with staking. Actually, is the first and foremost example. When it became a thing, administrators had a real problem with it. Like mechanically, it kind of makes sense as some sort of daily, paying fixed income product. The data was different. The accounting treatments were different. The implications were different, right? So you then you expand that out to loss of keys, airdrops, forks, all the crazy stuff in DeFi. I remember years ago when DYDX first launched with effectively like inverse derivative tokens, right? So I get long some DYDX token that's called ETH, but really it's almost like an insurance product or like a credit derivative swap product, right, where you buy the asset but you're actually short the risk because it's insurance products. So the kind of first gen accounting tools, including stuff that I represented, was started doing it wrong because some manager identified the opportunity and said, I want to take this kind of risk for my strategy. But the accounting tools were like, well, if you buy 1 unit of whatever, the risk is 1 unit of whatever. Um, some smart math person is going to hear that sentence and be like, that's completely that doesn't make sense. But I think the point is, if I buy a thing, it looks like I have some sort of amount of risk, but it's really offloading that risk. So all the first calculators were kind of doing that wrong and at the very beginning of it, right? And the teams understood it, the teams that were DeFi native. And so this wasn't an administrator, this was actually the technology provider. So someone like an Otto from last pod, right, would come out and say, hey, there's a new thing in the world of crypto. This is actually how we need to account for it and treat the data. An administrator that's like, hey, we deal with hundreds of thousands of equity guys or fixed income guys or whatever, the product's completely different, right? The expertise, the knowledge set's completely different. The data looks different. So the more complicated my prospect or my partners get, the more impassioned I am about, like, hey, you really do have to identify the administrator that really understands what the hell you're doing.
So kind of pivoting a little bit here, you started your career as a trader yourself. You understand demand and trying to predict where demand might go. From the perspective of your end consumer and the tokenization side of your business, where do you think the major demand is right now? And then also, 3-4 years from now, if you had a crystal ball, where do you think it'll be?
Sure. Well, I'm not a trader anymore, so I don't know how good I am about forecasting supply and demand. But broadly speaking, if you look at the data, right, so far, when you look at tokenized RBAs, specifically in, I guess, government securities, I'm trying to think of the RWA dashboard in my mind right now. The lion's share of the products, so not just from Securitize, from great friends at Superstate and Centrifuge, et cetera, right, have tokenized money market funds, AAA CLO product. Not very sexy, right? Yields aren't amazing. I mean, they are what they are. It's effectively dollar, yield bearing dollar equivs, AAA CLO credit product, et cetera. But that's what DeFi has. If DeFi broadly is built on yield, right? Those are the products that are the most reliable at generating yield so far, and that's where we've all broadly gotten comfortable with. I do think, though, over the coming months, coming years, we're going to see this natural bid for risk extension, right? There was a major RFP out that came into the market at the end of last year, with very targeted goals in terms of liquidity profile, in terms of yield bogey or yield target or estimated yield returns, et cetera. We're starting to see the demand for bigger numbers, right? And correspondingly, that means some extension of risk. So what type of other products are out there that are still reliable, but to start moving people out, right? And in terms of taking incremental risk for that additional yield capture. So I do see that. So huge topic of conversation that I typically don't try to drive internally has been real estate, commercial real estate. Historically as an organization, we have our stance in terms of saying, hey, we're not going to tokenize our focus hasn't historically been commercial properties or anything of that nature. The funds I love, right? I love talking to gigantic real estate funds or commercial real estate funds that have want to explore tokenization. Great. Is the market demand there right now? Not that we have seen, but there are players that have built their business and I think are doing great. It's just not a thing that we found a lot of traction with, I think, historically. But I do see that, right? I do think that someone will bring in thousands of mid-tier hotel properties across the U.S. and say, hey, because there's a traditional market for that. It's like, Ryan, I've got 3,000 rooms, occupancy rate historically at 92%. Can I borrow and lend against my stake in this, collateralized hotel suite or what have you? We'll see those things for sure, but we're going to continue, at least from my perspective. Maybe I should have started with this. The ethos of Securitize has been, if creating the token is a trivial piece, then what's the hard part, right? Again, there's a compliance piece, but there's more. That's all defensive, right? What's the offense with our token? And that's the additional utility. The answer so far in the market, at least for the kind of narrative for 24, 25, had been what I call yield-seeking behavior. I have a token, it's a money market token. It generates 4%. What can I do to get more yield off of that thing? Oh, I can LP this thing. I can use it as collateral. I can use it for a settlement purpose, right? So there's additional use cases, but typically we found people want to drive additional yield. Same thing with our private credit product. It's a private credit product. It is what it is. Call it 8%, 10% target. We worked with the team to build out looping capabilities so that, and again, it exists in a kind of traditional world. This is a little bit more seamless. You can borrow stablecoins against your private fund shares, and do that multiple times, right, to continue ratcheting up that return, obviously with the corresponding amount of risk that you feel comfortable taking. So we really want to bring stuff like that to market. So my inbox is flooded with a team that wants to build tokenized burial plots, like a full cemetery somewhere in Mexico, right? We've got buildings, we've got oil tankers, we've got Pokemon cards, we've got individual RWAs. That's not really our focus, and even if it were, I think we would still want to, because we found the most kind of commercial traction in market with, great, we can bring a thing on chain. What can investors do with it? Right? Investors can do, capture more yield, generate more income, do something that obviously rolls up into that manager and say, hey, now I'm able to capture more AUM. I'm in market with this really cool product.
I mean, that makes a ton of sense. And I have many more questions I could ask you. Unfortunately, this is around the time that we usually end the podcast. But for myself, and then also the people that I'm sure have more questions that are listening, where can they kind of follow along, get to know Securitize better and see what you guys are building?
Sure. At a corporate level, securitize.io is our website. Our team across social channels, across X and LinkedIn, super active, responsive. I have a deep, newly found or reestablished respect for great social media people. So our team is phenomenal. Love them to bits. Me personally, I'm really doxed online. I'm a crypto punk as my PFP, but you can find me on X and LinkedIn at the Duke Kim. Easy to find, always happy to chat and rap about tokenization, fund administration, capital markets broadly.
Well, thanks so much for being here, Duke, and we'll make sure to link all of those on this episode of Decentralounge, both on YouTube for those who are watching the video. If you're watching or listening on Spotify, Apple Podcasts, we thank you for tuning in to this episode of Decentralounge, and we'll see you on the next one. Take care, everybody.
Thanks, guys.